All right. So obviously the focus of our conversation is we're pretty tax heavy. It's that time of the year. I'm sure it's really busy for you. What documents are we supposed to hold on to and start gathering? Like, you know what I mean? Like every year I'm like, there's a lot of stuff. You mentioned it in the beginning of our conversation. There's always something. And it seems like whenever I get started, there's always another form that comes in the mail I didn't know was coming. And it's what forms should we be ready to gathered and what should we be keeping and how long? It just seems like there's a lot of papers and a lot of forms. I'm just filing them in a box.
Yeah. Well, in this day and age, there's so much that's electronic. It's hard to say what are we keeping or what is accessible. But let's kind of think of it this way. Let's get ready for this year's taxes. So if you work for a company and you're a W-2 employee, you're going to have a W-2. That's going to show your total earnings, withholdings that you already paid. If you reduced income by doing a pre-tax contribution to a 401k, that's going to be your main income source. If you're a consultant, you maybe have any kind of a 1099. Your investments, interest in a bank, they come on different 1099s. There's a 1099 for retirement, R for retirement, 1099 INT for interest, but those are income sources that are on a 1099. So they're the big ones, I'll say. If you have an IRA and you're making withdrawals from that, that's going to be on your 1099-R. So those things are all going to be the first and the largest part of the income that you want to keep track of. If you're getting Social Security, you'll get a statement from Social Security. So all of those incomes. So let's just call them W-2s and 1099s. So how do you get ready? You know how many jobs you had. If you worked at more than one place as a W-2, be thinking, I'm going to get more than one W-2 this year. If you did work for different people as a consultant or have different flows of income from different places, you're going to get more than one 1099. So you want to think back last year where you worked and who paid you income and be ready. Get those in order. That's kind of the easy ones. The things that I think come a little bit late that get people caught off guard, things like a 1098. This will tell how much if you have children going to college and how much tuition you paid. The institution will provide information on the tuition, not the room and board, which is also a number you want to keep track of. But that 1098 will just be tuition. You'll also get a 1098 if you pay a mortgage. That's going to tell how much interest you paid, which is a deduction that you can take against your income if you itemize. So those things you want to start lining up. Think about all of the accounts that you have. Those are going to come a little bit later in February, usually. Your retirement account information and your 1099s and your W-2s, or your 1099s that are retirement accounts, I should say, come at the end of the month of January, as does your W-2. By law, they have to be postmarked. So they're going to come, in January or right after that. But if you have an investment account, those 1099s take a little bit longer to reconcile, and so they generally won't be mailed until the 15th of February. So sometimes you've got all your things together. I got everything, and darn, I forgot about that account. So keep that in mind. So it's a good idea. Like I keep saying, be organized, because this time next year, just remember all the documents you got last year or all the accounts you had last year, and just look at the list last year. Did I get all of those? If you're missing one, oh yeah, I don't have that account anymore. That's why I don't have it yet. And on the other hand, try to remember if you added something new. I'll just say a plug to working with a professional. If you start to do some consolidation, you're going to get one packet, and you're going to have one place that they're going to send you a package of your 1099s instead of all of these different things coming from different places. So you got 1099s, W-2s, 1098s with your interest. Here's the one that throws everybody. If you have an investment that has passive income or limited partnerships, sometimes you'll own an investment and you won't be thinking that it would sound like that's what you have, but it could be in that framework. That'll come in what's called a K1. Now, a K1 is like a 1099, but it's a little bit different, because basically an entity figures out how much income it had and how much of that income is taxable at the entity level. And then it's going to say, Pete is entitled to this much income and Justin's entitled to that much income. And then the K1 is going to say, we, the entity, don't pay tax on this because we paid it to Justin. And so you're going to get that portion on your K1. they tend to come later. They tend to be more like March 1st. So for that really motivated person who gets really everything organized and then they drop it off to the accountant or start putting things together, you hit submit if you're doing it yourself, and oh darn, then you open the mail, there's a K1. So sometimes they catch you off guard, but that would be the one I think that's kind of, slips by. But all of that information is on, is part of what you're, keeping track of. Thanks for tuning into the video today. And if the conversation we held resonates with you, check us out at goodfinancial.com. Go to contact us, and we're happy to schedule a conversation with you to answer any questions you might have and help you in your financial plan.